The following podcast was recorded the afternoon of Tuesday, May 18th, 2021, featuring Jim Bianco of Bianco Research discussing the crypto sell-off. To hear the podcast in real time, you can sign up for a free trial at arborresearch.com or biancoresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everybody to the latest edition of Talking Data. I'm Kristen Radosh with Arbor Research and Trading, joined today by Jim Bianco of Bianco Research. How are you, Jim?
I'm fine. How are you?
Good. I'm ready to talk about crypto. What's the latest with the sell-off?
Yeah, so we've had a bit of a sell-off in crypto, and your view about crypto is how long you've been in this space. First chart we could take a look at Bitcoin is Bitcoin has sold off 31% in the last week. So I was kidding with you earlier. What are you complaining about? You still have 2/3 of your money left at this point. But as the chart shows, the bottom part of this chart in red shows how a drawdown chart, how far off of its all-time high is Bitcoin. And it's spent a lot of time, 90%, 80%, 70% drawdowns on this, and it always bounces back, at least it has to date, and made a new high. So a 30% sell-off in Bitcoin is kind of par for the course, or as I wrote this morning, this is what cryptos do. And if you take a look at the second chart, which is Ethereum, which is the other Bitcoin, it's only off 17%. And, as late as a year ago, it was still 92% off of its all-time high. Its all-time high was $1,300 and was trading at $100 a year ago. And today now it's struggling at $3,400. The point is, this is what cryptocurrencies do. Why do they do this? They do this because they're unproven technologies, and unproven technologies usually attract real risk takers, whether they're short-term risk takers or long-term risk takers. And so if you want to compare this 31% decline in Bitcoin to the stock market, you really can't, because we had a 34% decline in the S&P last year, and the world nearly ended, and we had to have unprecedented Federal Reserve action to kind of save the stock market from itself. You'd be better off comparing this to, if we go to the next chart, which is Apple. And if you look at what unproven technology are, now Apple is the largest company in the world by market cap, over $2 trillion as well. Apple is a stalwart of everybody's portfolio now, especially if you're a professional manager. But look at its history from the early 80s to the 2000s. 70-80% declines in Apple stock was common fare for 20 years, as it was evolving from an idea to an unproven technology, to a technology that needed to be refined, to where it became the staple of society. So this is probably a better comparison of what's happening in the cryptocurrency space than to look at the sell-off there and try and put it in stock market terms. This space does this all the time, and I suspect that we are going to continue to see it happen as we move forward from here.
Well, next, let's move into chain analysis. The nice thing, blockchain, all trades are publicly available. So what can you tell us about chain analysis? How do we use that to compare?
Yeah, so I think it's important to understand that everybody's account on the blockchain is available to be seen. My account, your account. You have this public key, which is 64 letters and digits. I don't know it's your account. You don't know it's my account unless I publicly announce, here's my public key, and then you know it's my account. And if you go into that account, you can see what that account owns and when they bought it and what their history is of trading it. It's referred to as a wallet in this space as well too. Because you've got that level of detail, we can look at what the trading patterns have been in the crypto space to a degree we could never do with the New York Stock Exchange. You can never go into, here's an account number, and see what stocks they own and what their history has been of buying and selling and how profitable they've been. Maybe I don't know whose it is, but I know it by a random number. You can't do that in this space as well too. So what you've got is in this possibility is to look at it. So if we go to the first chart, there's a data service provider named Glassnode, and Glassnode is probably the biggest data service provider in this space right now. And they look at a lot of the what they call net unrealized profit or loss, or NUPL. And in their studying, they've looked at this and they have determined that 155 days in the crypto space is the line of demarcation between short-term and long-term. So let's look at the short-term traders. So the black line on the chart you're looking at is the price of Bitcoin. And the colored line is the net unrealized profit or loss of all the short-term traders updated through an hour ago. And it's a daily chart. And what you'll see is that it is turning red right at the end there, and it just went below zero. So the average account that owns Bitcoin for less than 155 days, that's the line again that they said was short-term, is at a loss and is selling their Bitcoin. Now, if you go to the next chart, this is the NUPL chart for long-term holders of more than 155 days. That's blue at the top. What that means is that the long-term holders are buying. So this is what you've seen time and again, and this is what chain analysis can offer you. What's happening in the crypto space is it's being, to use blunt terms, it's being puked up by a bunch of short-term traders who haven't been making any money. The long-term holders, or hodlers as they're called, are scooping up all these coins. They're just buying them all up. And that seems to be the way that it's worked from pretty much every decline over the last couple of years. Maybe this decline's something different and that it keeps going, and then these long-term holders decide that they're going to stop buying as well too, or maybe not, but we'll see. But right now, what you're seeing in this space is nothing unusual for the way it works. And this on-chain analysis really gives you an ability to understand this space in a way that few can. One other statistic I'll throw out at you, which I didn't put the chart together on, is you can also get a list of the number of accounts that own more than 10,000 Bitcoins. It's $600 million or $400 million or something like that. Those are the whales. Those are the big whales, as they call them. For the last several months, the number of 10,000 Bitcoin accounts has been declining, suggesting that what they've been doing, those big whales, is they've been selling off their holdings as the market has rallied, and they dip below 10,000 and they fall out of that list. And so the takeaway was they've been using that opportunity with the rising prices to take profits, if you want to think about it in those terms. That's turned up in the last couple of weeks, that the big whales, seeing the sell-off and the struggling in the market, are reaccumulating coins in this low 40,000 range because they think that it represents a staging point for where it's going to go higher. You know, and if you want no other example of that, then Mike Novogratz at Galaxy Partners, he's a big whale as well. His call has been that cryptos, Bitcoin, will go between 40 and 50,000 for a couple of months. Mind you, it already has been doing that for a few months before it sets the stage for a new high, probably as a run towards 100,000. Now, just because he said it or some of the whales think it doesn't mean it's going to happen, but that's the way they're positioning. The bottom line with this is what's happening in crypto land with Elon Musk going crazy with all his tweets and everything. It's kind of what it does every few months. And it's always another reason for why it does it every few months. And how much influence does Elon have over cryptos? Ask me in 2 months. You know, we'll see whether or not he marked a major high in the market and it just continues to go down, or if this is just the volatility of the week and he's forgotten and we kind of go back up on another story and move onward and upward to other things.
Well, we'll continue to follow this, Jim. Appreciate your thoughts today. We'll continue with our crypto series, so stay tuned for more. Thank you for everyone for joining us today. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our two most prominent offerings are Bianco Research and Arbor Data Science. For further information or any questions, please contact Gus Handler at gus.handler@arborresearch.com. Thanks, everyone.